through our next session that discusses the idea on building a resilient fintech ecosystem, mitigating risks, and safeguarding consumers. I would now like to take the pleasure of inviting our esteemed panelists up on stage, and I do request you all to kindly join me in giving them a round of applause and welcoming them up. Ladies and gentlemen, we have amongst us a moderator for this session, Anil Tiwari, the partner at Cyril, Amarchand, Mangaldas. May I request for Anil to kindly join us up on stage? Thank you so very much. Thank you very much for joining us. And I would like to invite our esteemed panelists to now join us up on stage. Ladies and gentlemen, we have amongst us Mr. Bharat Panchal, Chief Industry Relations and Regulatory Officer, India for Discover Global Network. Let's have a round of applause and welcome him up on stage, please. Thank you, sir, for joining us. I'd like to welcome up on stage Mr. Anil Tadimeti, the Product Strategy at Bureau ID. Welcome up. Thank you so much, sir, for joining us. Ladies and gentlemen, let's have a round of applause, please. Thank you. I'd like to invite Mr. Dasgupta, Senior Director, Global Advisory at BioCatch. Let's have a round of applause and welcome him up, please. Thank you for joining us, sir. And finally, I'd like to invite Mr. Rohan, Vaidya, Regional Director, India and SAARC at CyberArk. Thank you for joining us, sir. And with that, ladies and gentlemen, we're ready to commence with this session. I hand over to our moderator, Mr. Tiwari, if you can kindly take this forward.
Thank you so much. A very good afternoon to everybody. Probably post-lunch sessions are the toughest, so we'll try and bring in some spice into this bit of a heavy topic. And we have a fairly well-known panel here, cutting across payments and cybersecurity. So probably a perfect topic given the August panel here. Let me start by asking a bit of a contrarian question because our topic is resilient fintech ecosystem managing risk and safeguarding consumers. I mean, anybody who's been following this space for the last 2-3 years and is in the industry has always complained there is too much regulation focused on risk, which is probably not even there, at least in their eyes. And there is too much consumer safeguarding. So let me start with Mr. Panchal. Whether there is too much of customer protection and risk management, or this topic still is a relevant one?
Let me ask you a counter question. Where you say that enough protection is there for customers? Because when you see today's ecosystem, the way it is flourished in last almost a decade, 2010-11, there was no skimming fraud, there was no Damtera, there was nothing. But that has, over a period of time, has evolved like, today India is, at the stage where, while 10 billion is a great number, but at the same time, the customers are losing the money. Customers are, some or other way, they are losing the little bit confidence using technology. How we can give that confidence so strong to the customer that when you are giving an application for making a transaction, it is not a form factor, but it is a trust and confidence which you have built in the system. And to build that trust and confidence, it's not a kind of just a matter of technology. There are a lot of things involved into that. And if I see back 2010 when I and other colleague, we started NPCI and what it is today, when I left in 2019. But in the span of 9-10 years, apart from building technical resiliency and technical infrastructure, the great work done by my previous organization is to build trust among customers, right? However, when you are looking at the, be it, NFS, ATM interoperability till UPI and FASTag, customer trust and safety and security is inbuilt or security by design in the product. But over a period of time, the newer challenges are coming. So at no point you can say that, yes, now it is good enough and you can just go blindly and do a transaction or do a banking and nothing is going to happen. So no, there is no end as far as customer protection or security is concerned.
With that interesting perspective, Rohan, your thoughts?
So I think security is never the the destination. It's a journey. And as we go along the journey, we discover a lot of pitfalls, potholes, now deception, and a lot of things which kind of go around and come back to us, realizing that this may be or may be not a decision to make. And especially with the digital world, the trust is now becoming more digital. And what I mean by that is that the day you banked, maybe people in the room, maybe there are a lot of people who probably have not banked in a branch, but people who have, we always chose a bank at that time which looked bigger, larger, had a stronger, what I would say, an infrastructure. So the place of work was a place of trust. The moment you get into digital, your trust is a digital trust. What do you trust on? Is the mobile app, how good it looks, how good the UIX is, how quickly you click, and how many less clicks you make to make a transaction. Now, these are things which from a user experience is very good. The moment you have a security guy like us who walk in, everybody hates us because you make things slow, you don't align to the business and things like those. But if we start working together and have this part as protecting those digital assets and those digital identity, what CyberArk is into, basically protecting digital identities, then you start giving a very seamless experience. And that is what the world is moving towards digital. And that's what exactly Bharat was mentioning. Though security is never going to stop, customer needs are going to change, and the journey continues, but the journey has to be fulfilling rather than a fearful journey.
So clearly data and privacy is a big theme. And who better than Anil to comment on this? I think I'll add a nuance for Anil, especially given as somebody who's not an RE. I mean, typically you think of fintech, you think of what? A PSO, payment system operator, an NBFC. You even may think of a broker dealer, from a wealth tech, or now even AMCs are technically fintechs, right? I mean, we have Zerodhas and Grows and Fisdoms. But there is this big ecosystem outside of the regulated space, which looks at it very differently, and especially data, as Bharat mentioned. So how would you really see data as a big risk?
Anu, thanks for the question. I think it's quite pertinent in view of even the recently passed Digital Data Protection Act, and which heralds a new phase in our country, where the contours were not clearly defined earlier. And unfortunately, in this post-COVID era, during COVID as well, there were incidents of misuse that happened. Therefore, then obviously it is expected that the regulator now takes a hard stance in some of these things, as we witnessed even in case of the digital lending guidelines. So one thing that we at Bureau facilitate is the fact that no matter who you are, what we do is fiercely protecting data of the end users. So the idea behind this is the fact that there is only minimal data that is acquired and that is actually relevant for the purpose. And some of the principles which are laid out in the recently passed act have attested to that as well, right? So in that sense, I welcome the recent moves and also believe that regulation does help in ensuring systematic growth while protecting interests of consumers, because there also been concerns on how certain contact details were, elicited, strong arm techniques used in collection. So these are challenges that we grapple with that can upend the financial system and also erode trust that data fiduciary and a data principal may have.
So in fact, data, we have a separate sub-point which I was looking at coming later, but clearly we have started out on data. Let me ask Raj for an outsider's in perspective, because clearly in India, of course, data is one big theme. But besides that, as somebody who's been looking at this ecosystem and also the Valley ecosystem, and again going to the first question, besides data, is there a risk today we see, not underwriting, not a book quality risk, which is more a lending risk. But if you look at more a payment, or you look at, even, and typically we think of fintech only as RBI. Fintech now is all across, from an IDAI, PFRDA, SEBI, METI increasingly has a big role to play on fintech. So keeping data aside, do you see any other risks and any other safeguards that today customers don't have?
Yeah, for sure. Thank you for that question, Anu. If I may go back to the first question a little bit, my perspective on regulation is that regulation is necessary, but regulation really can't keep up with the pace of emerging fraud patterns, emerging risk patterns that every business, fintech, banks, etc., will face on a regular basis in today's world. So regulation is good, but not everything can be solved with regulation. What you need is the latest and greatest in technology, adding on as a layer on top of what you already have. Case in point being, most of the risks right now in today's world is assessed by looking at users' personal information, their credentials, and also their device information, what their device looks like. But given the nature of the risks that we are faced with today, those are not quite adequate. So from my point of view, what customers like fintechs and banks can benefit from is adding on a layer of protection by using user behavior as a means of protecting against fraud attacks, against other kinds of risks. Because behavior is something that's very, very unique, can give you a very rich set of data to assess risk with, and it's something that you're not using quite likely today. So regulation, yes, necessary. It cannot solve everything. You have to look for newer technology, and behavioral biometrics is one of them. Now, coming to your second question, which is, apart from data, what other kinds of risks I see? Now, data is the lifeblood of any company right now. If you're trying to grow your business, you would have to mine the data for insights to see where you're exposed, where you can do better, where you're already doing well, and all of that. Now, that's in your control. But the other kind of risk, which is not in your control, is what the user, or your customer, does. Now, they can be at the receiving end of let's say, a scam. We hear about scams all the time, people impersonating themselves, fraudsters impersonating themselves as bank employees, or some other kind of stories they'll tell to gullible users and consumers like you and I, and they'll fall for it. They'll send out money to the fraudster later on, realizing that they've been victim of scam. So essentially, your customer becomes the weakest link in the ecosystem, and you have to safeguard your customer and your business by, again, looking at newer technologies. Here in this case, for scams, there is a lot of very, very sharp insights you can gain from user behavior. For a case in point, when somebody's sending out a payment from their own bank account or on their fintech account, they are using their own device, they're using their own credentials to authenticate themselves. However, they may not be quite behaving like themselves because they're under duress. They're listening to a phone call which says that if you don't do this, then something bad will happen, you'll lose financially. So there are signs that can be picked up from the user's behavior to assess the risk of that transaction in real time. So in a sense, to answer your question, yes, there are risks outside of data. Customer becomes almost the weakest link in the ecosystem, and you have to have technology that can protect against that.
Actually, Raj, that raises a lot of follow-on questions. Let me just ask a counter, just to sharpen the point you raised. If you look at the genesis of BFSI space in India, it was still 35 years ago, just public sector banks. Then starting with 1993, you got the True Blue, the round where HDFC and IndusInd, 93, became banks. And then 2003, you had Yes and Kotak. 2015 was IDFC Bandhan. And then, smaller ones in between. Similarly, the whole non-bank space, there was Peerless and Sahara, and then it evolved later on to the Cholas and, the Bajaj and Aditya Birla. Now what has happened is the Indian fintech space was always envisaged as a licensed space, right? Now, the part of the world you are looking at, see, we've had the likes of Lending Club, which have raised P2P, right? Then there's this Robin Hood model, which has raised the whole securities, dabbling in securities. Digital assets, right? The buy now, pay later was a mix of a Valley and Australia ecosystem, how not to be licensed, yet give a wrapper, buy now, pay later. Similarly, the whole account aggregation. PayPal was the true blue, which didn't get slotted within a card network or the bank rails. Now, what happens is when you superimpose these models into Indian ecosystem, and it doesn't completely fit within the geopolitical and sociological challenges here, then founders start to think, oops, the regulators are not conducive. And then typically, this always, AI ML is the next frontier. We'll see a lot of flirting with the established regulations and again, the same risk. So my question is, would it be better to contextualize a business model? Because the risk also arises because you're trying to wholesale copy a model, as opposed to simply just wondering it has worked in a geography and should work here, with similar risks. Also conscious because Western world is very soft law. It doesn't have regulations, right? Which is why they allow banks to fail. We don't. This was an off-script question, so let's.
Yeah, I would say that what you have to do, of course, every market has its own nuances. What works elsewhere in the world will not work in India, and vice versa. So given the local context, what would still be applicable is how you balance risk-based assessments, risk-based methodologies, treatments, authentication being one, against user experience. As a user of a digital asset, now we are all transacting online all the time, be it on our phones or on our computers. So we would want a good, delightful user experience. And as a provider of that service, you would have to balance the user experience against your risk controls. And I think largely it will be replicable based on what have been done outside India. There could be local nuances where you have to be compliant with local regulation, but I think for the most part, a lot of the good stuff can be replicated here because some of the other regions of the world have matured and have seen all the risks that are there in the fintech world. And so we can learn from them and replicate some of it here.
Let me give you a different color what you both were discussing so far. So as you said that barring the lending risk, what is the risk in payment as far as data is concerned? Let me give you two parts. One is tactical risk, which is forming a part of the overall operational risk, and then comes to a strategic risk. So when we are talking about tactical risk, see, we are cursing or praising regulator based on our need and the comfort, right? But it is the regulator which has seen the great vision of the ecosystem where we all are sitting today. There's no doubt about it. Nobody has any iota of doubt about the regulator's vision. Regulator has regulated the regulated entity which are predominantly bank. Bank has started outsourcing their IT operations and IT to the third party. How much control you have replicated to those third party entities where you are supposed to store your data? We just believe that we have outsourced, that means we have outsourced our responsibility also. So that mindset is still predominantly there in every institution, that if any data breach happens, it is not me, it is my third party supplier or vendor is responsible. That is there is a perfect mismatch of our understanding as far as regulation is concerned. Now, when you are talking about the Western world, I also work for American company, great innovation, great work we have done at Discover and Diners Club International. We are the people who have brought credit card in the industry. Other hand, I work in UPI. But if we mix both these two, what is fit and suitable for this society may not be suitable to that other society. We are, with all due respect to the all innovation happen worldwide, we always praise the Western world for all the innovation. But in terms of payment ecosystem, the innovation what we have done, I mean, I'm always refer the second factor authentication way back in 2008. It was the regulator, but everybody was, quite discomfort. Oh my God, there's no, mobile connectivity. There is no last mile connectivity. People are not having handset. How are you going to deploy it? Today, second factor authentication is like a commodity for us. The same world is waiting and asking India how we can implement that. UPI is far away. UPI is far distance for them to even understand, forget about implication. But why I'm referring that, when you go and see the same world, as far as the responsibility and kind of partnership in terms of any data breach, they are first to come and report that yes, there's a data breach. They publicly disclose, they disclose the market, they disclose the customer and everybody. But the same thing when come to us in India, forget about disclose. Are you aware for data breach readiness? If anything goes wrong with your organization, how are you going to survive? We have not even thought of. We are leaving everything on regulator. But when it comes to risk assessment, actually keeping all this component in mind, we are literally lacking behind. That is the tactical risk. The strategic risk, I will tell you. As far as data is concerned, India is the highest, the number one country in the world today generating data. There is no country has 1.3 billion Aadhaar card. There is no country where 10 billion UPI transactions. There is no country where 1.35 billion people are living, and almost everyone is doing digital, be it social media, be it banking, anything. Look at the kind of digital footprint what India is creating. Last year, the same GFF, I asked a question to the minister, Honorable Minister Ashwini Vaishnav, about when the DPDP will come. DPDP is here now. But bringing law, bringing a bill will not change the mindset of people. Privacy is not a technology issue. Privacy is a mindset issue. Till the time we do not change that perception toward privacy, no bill, no act will help us. How are we going to manage that strategic risk in India? That's the biggest question. It's not about the responsibility of fiduciary. Fiduciary has to run the business. He will be responsible. But what is the responsibility of data principal? How are you going to fix that guy? I think that is where the strategic risk, and that is where the biggest risk which I probably foresee apart from the lending.
And Mr. Panchal, that's why there's a 250 crore penalty prescribed to change the mindset.
Peanut, sir. Let me be honest with you, it is a peanut. If the guy is, I don't want to name, but somebody is doing $1 billion business here in India, $250 is a rounding error.
In fact, if you look at the top,
happy to pay.
top 10 penalties in Europe, it's a public list, 1.4 billion, I recall, was the largest.
Again, the problem, but again, the penalty is decided looking at the Indian context. Why you are not looking at the global context? The MNC company doing $1 billion business in India, 100 crore rupees is the rounding of error. There's an incentive they are doing for marketing. It's not a big impact to their business.
No, true, and that's been a big criticism, because I would just look at it mathematically. If I can cross-sell something without informing my customers, then I am going to make, say, 500 crore. It's okay, let me pay 250 crore. So that was supposed to be an opener light question, which clearly has warmed us up. Let me just go to shift gears, and again, keeping track of the topic we have. Typically, the worries or risk, and again, I'm not looking at underwriting credit risk, that's a very different area. The three risks one always thinks about when we look at fintech. One is a mis-selling risk. On my way back, I got called from somebody who was telling me, you've not renewed your subscription. I said, but I've cancelled it. They said, no, but renew it. I said, but I've cancelled it. So, and it became acrimonious because, no, you have to renew it before you can cancel it. So, and the quality purposes, recording of a conversation is only from one side. Unless you also record as evidence, it is not really, dispute resolution requires evidence, right?
That's a good idea.
So you don't know whether you'll have to use a conversation as evidence. And of course, nobody picks up calls. That's the other thing. So the first thing the person said, you've not been taking our calls for a month. I said, who now takes calls? But one is mis-selling, clearly, which is a huge issue. And fortunes of businesses get made and get destroyed basis the perception on mis-selling. We feel it doesn't matter, but ultimately in the long run, selling and mis-selling is a big issue. Data privacy we've covered at length, and a separate session can be on data privacy itself. Third is after-sale service. People think in BFSI there is no after-sales service. In fact, increasingly, there is a lot of focus on after-sales service, which is why the whole bot or AI ML that gets talked about, which is grievance redressal. I mean, today, one doesn't really know. In fact, there's a very interesting clause in the DPDP new act which says if you are using my data as a fiduciary to make a decision about me, then you have to prove that data processed is consistent, accurate, and correct. So technically, if you deny me a bank loan or don't give me a limit, deny me a card, I can at least get you to prove that you've, both of us similarly consistencies, A plus A's, apples and apples, and you've processed my data. So that's a very interesting, one more very interesting nuance in the new bill is the burden of proof has shifted. There's this clause called 610, which says that if a complaint is made, then the obligation is of the fiduciary to prove two things, that consent was taken and the purpose was specified. So it's not the accuser, the poor customer's burden to prove that, you didn't take my consent. All I have to do is say, you didn't take my consent, now you prove. So it requires a fair bit of audit trail. But coming to the whole grievance redressal, because there's a lot, today nobody knows how to really, where do you go crying? Because the amounts involved are not much. So do you feel there are gaps in these high-level areas, and if at all, how should regulators address it without, again, killing the business?
So I think there are always going to be gaps, and one of the things that we see it from more of a cybersecurity vendor eyes, if I start looking at it, I look at it in two ways. One is you have a regulator who's breathing down on the customers, the service provider's neck. And the conversations are all about, when you have those conversations, either with the regulators or with the businesses who are regulated, the conversations are all about compliances. And if you look at a historical data of all breached companies, I would say most of these companies were compliant. So compliance does not mean that you're secure. Compliance means that you followed a process, a protocol, and you have a chance of not getting breached. But customers, and the moment if you go back and look at the business model a hacker would use, is when you are compliant, you followed a particular process. You followed a template which is available for everybody. And it's very easy to navigate through that template to find the lacunas and use that lacunas to really go after. And now hacking is a established business model with instant gratification. And there are more brains and more energy and more AI, generative AI put into it to really get those dollars out, which you would not normally make in a legal business. So I think those are the areas which people need to start thinking, that you need to not be just compliant, but you need to be really conscious of what you're doing it. And I go back to a very simple analogy that you may go to the best institute, study, but if you're not street smart, if you don't have the common sense, you would still make those small mistakes which would cost you a life or money or property. The same thing is in the cyber world, which I'm saying, have a little bit of cyber sense. If you get a call which sounds like your wife saying that, transfer $40,000 to this account, take a step back and say, has she ever made this call? Will she really make this call? Is this a generative AI calling me with a similar photograph trying to tell me this is what is it? And with your social engineering, what you talk about, everything around the world, if I correlate it, I know exactly what you're doing at the time of the day and month. So kind of, if you take a step back, I think it's going to have a very different impact. Are every one of us going to experience some kind of hack in our life? Yes. Are we going to lose some kind of a thing? Yes. How do I just reduce that risk? It's like when I drive, I always have a possibility of having an accident. That doesn't mean that I stop driving, but I always make an effort to make sure that I follow the rules, which is the regulator rules. I make sure that I'm very obviously looking at my rear view mirror and use all the possible blinkers as well as all the possible gadgets which are there which tell me that there can be a possibility, but still have a little road sense to do the right things. I think if we do that, we are probably in the best possible way to avoid, and the probability is going to be lower. And the people who are going to be more reckless are going to be in for trouble, which is a normal way of life.
So just let me give a few data on what Rohan exactly you said. So, we are aware that lots of frauds are happening today. People have lost huge money. And it is not by a street side vendor. It is by good IPS, IS officers, IIT, IM professors, well, digitally literate people. I would not say digitally, at least literate people. Probably they were digitally illiterate people. Where India is going today, in current scenario, in the banking, it is the GIF effect. And what I mean by GIF, and I'm giving this number, it is my own data analytics as part of my previous stint of 9 long years at NPCI. I have investigated millions of such cases. And with that, I'm giving it a lot of responsibility. 70% of fraud today in India is happening out of greed. Irrespective of the superior of the best technology you give, but the moment it is a greed, people give up everything. That is 70%. 10% to 15% come from ignorance, because I'm a guy who has built NPCI and work in finance. So how they can do a fraud with me? I just ignore that. That's the attitude, and they are falling in 15% category. Another 15 comes in the fear category, where having your UPI is disabled or SIM card is disabled is a life and death kind of situation. The moment your SIM card is blocked, you can't survive. And if that fear is created, that if you do not do your KYC, your mobile is going to be stopped working. You will not even give a few seconds to think why the KYC is needed at 12 o'clock night. But we still do that. So all put together, 95% of problem are customer-induced, not to blame technology. Yes, 5% are there where technology loopholes are there. And that is how the journey, the improvisation may happen. But 95% fraud is purely out of the psychological problem and not with the technology problem.
No, very true. And I'm conscious we have 8 minutes left. So let me just ask the same question, but with a nuance to Anil, as somebody who is an external supplier of tech products to the BFSI sector. Anil, insurance is taken by somebody when they have a lot to lose or they are in a neighborhood of criminals, typically, right? Now, in the context of risk mitigation by the REs, do you feel there is even a respect, if not fear, for the regulators by the counterparties, that you are? Because, look, if I know I can get away, then why will I take safeguards, right? And then accordingly, are you seeing increasingly people wanting to self-regulate, i.e. I'm not prescribed a certain, look, there is a cost involved with taking any ID verification or any third-party product, right? So are you seeing people, and people would want to self-regulate only when they feel they don't have to, but they should? And again, grievance redressal ties in here.
Yeah, Anu likes to be a contrarian, so let me ask question to the audience. How many of you have either experienced a fraud, have been a victim, or personally known someone who has been a victim?
Much bigger audience.
Okay, this is, I see hands being raised everywhere. How many of you know what is the helpline number for cybercrime cell? Okay, that's probably about 10% of what I saw earlier. So that's the contrast for you, right?
The question is what happens after you call on the number. That's the, whether you actually get justice or...
1930.
Sir, of course, you would know that.
No, just on this point, because it's impossible to track cyber frauds. The way money flows. I mean, this is one area I believe law enforcement world over is helpless. Sorry.
Yeah, so just to buttress my point about, so there are two aspects to it, right? One is what the regulator can do, what a regulated entity can do, but the onus is also on the consumer, right? And how many of us, when it's IPL, when it's something else, RBI kehta hai ads, how many of us skip through that, right? So, however, while Bharat sir mentioned that probably 95% of it is customer-induced due to psychological fear or anything like that, it's still true that customer is the weakest link today, right? And that will remain because all problems at the end of the day are human problems. So it's technology can attempt to solve for it, but will not solve fully. So where I think we can take a cue from rest of the world, and especially because it also deals with grievance redressal, is, for example, the fact that the payment system regulator in the UK has introduced reimbursement for authorized push payment frauds. I was sent an OTP, I shared it with someone else, I've become a victim. As guidelines stand today, under RBI's directions in either 2017 or 2019, issued to payment system operators, in this case, obviously, there is customer involvement, so the liability does not directly fall on the bank. At their discretion, of course, they can reimburse, right? But the larger point remains that grievance redressal is still not up to the level where customer knows that they can get satisfactory resolution. And just by the sheer number of the complaints that the RBI ombudsman receives, right? That in various sectors, like we've spoken about payments, but credit information companies have had their own issues. Right? 4 of them have been penalized for deficiencies, for not addressing, not rectifying. Right? So the problem is quite universal in that sense, right? And therefore, I think there needs to be a paradigm shift from compliance being a backroom function to boardroom function, which is happening, but perhaps at a pace that is less desirable. And one heartening fact here is the fact that even regulator is not purely looking at, say, KYC as a tick box exercise or compliance as a tick box exercise, right? Regulators across the financial services space have been hyperactive in the last couple of years. One specific instance I would like to point out, and that's something that is relevant to how, whether it's cybersecurity, whether it's somebody like us who are providing that underlying risk infrastructure, is able to prevent frauds. I think there's a lot of discussion about how we detect, how we do the postmortem, how we do the aftermath. There should be larger focus on how we prevent frauds. Right? For example, a couple of years ago, the RBI issued master directions on digital payment controls, where they're explicitly calling for device binding, as well as if you have a remote screen sharing application that's active while you have a payment app also, that needs to be disallowed or prohibited. Right? Now, this is a fraud measure. Right? This would have been good to have maybe 5 years ago, 10 years ago, like Bharat sir mentioned, right? When we started this era of instant payments. Today, the regulator is putting its foot down and saying this is a must-have. So gradually, this is a secular trend across, not just in India, we see across the world, where the regulator is taking more counter-fraud measures and is mandating regulated entities to install those systems that can enable fraud prevention, right? So obviously, the best part about this is as guidelines pick up and as adherence follows, people who are currently outside purview of this, for example, this draft master direction, right? What was issued to banks earlier, there is proportionality also mentioned because not everybody needs to comply with the same timeline. But we've had customers come up to us and tell us that I know the deadline for me is 2028. I don't want to wait till then. I want to do it as soon as 2024. Right? So there is acknowledgement of the fact that there is a need to have strong measures in order to protect the institution itself, but also the consumer at the end of the day, because that's what establishes a good business.
And good to end with future. I'm conscious we are out of time, but just one last question and a 10-second sound bites from all the esteemed panelists. If we were sitting here 5 years down the line, say 2028, right, and you had the same topic, which is risk and customer protection, what would you want addressed, like a 1 or 2 wish list you may have for regulators? I mean, I can tell you I don't want calls saying, you've cancelled but renew still, because, we don't care if you use it to pay us. That calls hopefully shouldn't happen in 28.
I think so. Quick one. I think there is still, if you are kind of cyber crimed or cyber fraud, I think there's still a stigma saying, how could you have happened this? I mean, how this can happen to you? If you are an engineer in the IT field, you're a loser, right? If you're from a cybersecurity field and you get, God knows what can happen to you. If you're in the enforcement agencies, if you're a policeman or something, believe me, the cyber cell refuses to take complaints or FIRs. So I think 5 years down the line, I think this is something which we should accept, that there is a force working against us, trying to beat us every single day. And every single day I pass without a fraud, I am a winner. And I think that is a mindset change if we get. I think 5 years down the line, we will be able to, take this thing to a much different level. Because the crime is never going to go, whichever world we live in.
To add on to the previous remark I made about having reimbursement for authorized push payments or anything where customer is still involved, one thing that needs to go hand in hand with this is developing a robust fraud registry. Today, we have different regulators. Even RBI itself has a central fraud registry, payment fraud registry. So the access is still not wide open, right? So in order to build a resilient ecosystem that truly safeguards consumers, that's where we need to begin and develop.
Well, Bill Gates once said that there will be banking, there, but there won't be banks. Probably that is the reality today, right? So banking is prospering, they're going leaps and bounds, but there are no banks. Rather, banks are shutting down ATMs and branches. So today what we are, if you ask me what we were 5 years ago, in 2014-15, few of us were thinking about UPI, how it may be a game changer. Today, that's a reality, has changed the game. But when look at the 5 years down the line, the banking system, the payment system would be there, but the risk which we are talking today may not be there. It will be completely different set because, see, technology is dynamic. The payment ecosystem also has become very, very dynamic. And therefore, the risk emanating out of that also will be dynamic. What will be there, probably, if you ask me as a risk professional, my wish list would be, when anybody and everybody do a transaction or any banking business here in India, by 2028, he or she will get confidence that yes, it is a genuine or fraudulent transaction, and that to keeping all newer threat, deep fake, AI-based, ML-based, because we are not only intelligent people. People in Jamtara are more intelligent than us. What AI you are going to use, they will have much more powerful AI with them. So how are you going to prevent with those kind of new set of risk? That is the wish list for 2028.
Just keep it short in the interest of time. I think no matter how much customer awareness programs or customer education programs you do, customers are going to continue to be the weakest link in your risk landscape. So in my wish list, I would like to see the regulators actually bring in regulation that protects the end customer. And that would be a forcing function for businesses to look for newer technologies that can prevent fraud losses and customer risk and actually protect the end customer. Ultimately, it's good for your business. Just imagine a customer, how delighted they would be if they were to see that they didn't lose money because of a scam or because of a fraud, and the business or the bank or the financial institution they were doing business with were able to stop that fraud from happening. So regulation as a forcing function for businesses to seek newer technologies to prevent that kind of fraud.
On that note, thank you so much. I think it was a few questions beyond our prep, but I think we touched upon some very interesting themes. Thank you so much.
Thank you so very much to our panelists. A big round of applause, ladies and gentlemen. And